Good morning, everyone. Happy Monday. I'm your host, Mark Stoker D. And we're going to be having a look at some precious metals, base metals, as well as the energies markets, and to see what kind of levels we can expect, where the dealers might be positioned, and some of the average ranges, and also to have a look at what Asia did. I had a little Asia trade last night before I went to sleep. It was a long, got to wherever it got to by the time that I woke up, so I took it off, and that is what you're seeing here. And now we wait for what the pre-market COMEX is going to do and how it's all going to play out. Alright, so let's start with crude oil as well, because crude oil is looking very weak to me. I think it has room at least down to 95. We have some bigger levels around there, and it's very likely that we could see some weakness on crude oil. Clearly this 100 level has been defended before. Nobody really wants crude oil above 100, but having said that, we do have some issues now with transport, storage, insurance of crude oil and related products. So again, I'm expecting headline risk this week, so we have to be a little bit more cautious with it. Therefore, it's not going to be just like, oh yeah, crude oil issues, let's go long. Crude oil is a very double-sided product that has huge swings when it is moving. And I know that many of you started trading maybe in the last 3-4 years, and perhaps you haven't experienced crude oil in this sort of a personality, and now you're seeing what crude oil really can be, so completely bonkers and crazy. And that's the crude oil that both me and Coach Hoop know and love, so I might be putting it back on my list of tradable products for intraday purposes, because I have only traded it via options for the last sort of 2-3 years. But yeah, maybe it's time to have a look at some micros on crude, obviously. Crypto Fish says, I live in Wisconsin. It's been snowing literally for 2 days, 18 inches so far. Jesus, that's a lot. We're actually getting some spring weather over in London, so and in England. So this week, Wednesday is supposed to be pretty nice. No more snow here. We didn't even have snow. I think we had maybe like, you know, when it kind of falls but doesn't really settle. Is it settling? That is the main question. And usually in London and England, you don't really get proper snow very often. You just get slush and then it's gone. Cryptofish also says, I am up 662 and locked myself out. Excellent. That's a great start to the Monday. So well done. Right. Yeah, my voice is a little bit messed up because I went to our friend's place. He's our best man. So naturally I always have consequences after social. And no, there's no drinking or anything. It's just me being old and useless. Right, let's have a look at copper levels and what it did during Asia, because I think I'm going to be focusing on copper again. Not much change. So we have this gamma wall at 590 still. And to the downside we have a bigger area of 550 that I would expect some support to appear. Asia was a decent range, especially for copper. 231 ticks, that's pretty decent. Now comparatively, if I look at how the Asia range looked for silver and gold, they are very muted, and we have had some fall in volatility over the last few days, and that is continuing to happen. But copper is rising in volatility. Not by much, just a little bit, but enough to maybe diverge from the other metals. And it is a base metal versus precious metals, so it's a little bit different. Now, silver does have a weaker put level at 77 area. And that seems to be reactive right now. I wanted to show you something on silver though. If you were here for group coaching on Friday, I did a little long for the end of day. And then I was looking at the single prints that were left behind on the profile. Look at where they bounced. This is something I wrote or I placed as a marker on Friday. Is this a surprise to touch the single print edge and immediately just bleed down from it? Probably not. Those gappy areas are very prone to doing this sort of a behavior. But now what? Well, we're seeing a move below the Asia low, so that could be a breakout, and that also means that Asia low could be in play. Now the new Asia high was created exactly at those single prints edge, so that is now potential area of interest if we reaccept Asia range and then keep going up. One problem that we could run into is that this 80 area on silver, it's a dual pin wall. What does that mean? It still has the pretty much the equal number of calls and puts there. And unfortunately that means that you might see a pivoting action where we don't really move far from it. We're just going to chop around it. So there's definitely something that could happen. But if we continue to see some bearish movement and we never manage to get back into and above 80 confidently, I would then be looking at the Asia low area and maybe a subsequent VWAP if it keeps sliding lower as a potential for continued move down. That's definitely an option as well. And let's have a look at larger time frames just for context. This is a 4-hour time frame. We went below the previous significant low from 3rd of March. Wicked below it, now we're creating a hammer candle. But on the daily time frame, that is also a very decent looking demand area. So from the large time frames, we could have a chance of a bounce from the demand area as well. So slight danger there. If they do start to reverse and the push further up, could be pretty relentless, and I wouldn't really fight that. The Righteous One says, good morning, Dee. Good morning, good morning. Yes. All right, let's turn to the value areas to see where they are from Friday. So we have the COMEX value at 79.95. So that's even bearish. Currently, that's very, very close to this dual pin wall. So that means if we ever retest that, even during COMEX, we can either accept the value by closing above that level, or we can go into a value low reversal and then just smash back down. So it is one of the areas that's either or. But where we are on the daily chart, I would maybe lean at that point. If I see value acceptance, maybe I would lean towards some longs on silver. But we have quite a few hours before we have to worry about that. So yeah, the larger time frame structure does indicate that we have some demand here. Whether the intraday actually twigs that that's what's happening, I don't know. We do have room all the way down to 75 as an overshoot to the downside. Yeah, so it's, silver is in a bit of a tricky situation. All right, copper though looks a little bit clearer to me. Again, let's have a look at larger time frames, looking at a 4-hour time frame. Similar situation, sitting in a some kind of a demand area. It's not a terribly good quality demand though. And sitting at the bottom of the range. This range has been here since January. You can even argue it's been here since December as well, because this was the starter point and then they started chopping around. So there's a good chance that copper does go into a further upside move from here. Copper already tested its own COMEX value. So COMEX value was created on Friday around 75.45. So let's use the volume profile fix range for this purpose. Just gonna go back. What was Friday's date? That was 13th. So yeah, I don't have it here. Let me just adjust the start time here. So COMEX start. Yeah, we're in a situation where the TPO value on copper is a little bit different, quite a bit different than the volume value. Interesting. Oh no, it's because I'm looking at the wrong day. Yeah, I'm not awake yet, I suppose. This was Friday. Get with it, D. Yeah, okay, that looks more sane. I was like, what's going on? They're never that different. All right, so here we go. So I have it at 75.45, but you can see that it's pretty similar on the volume profile. So we tried to test that area, created the Asia high, and then moved away from it. So now it's anyone's guess whether this is going to open inside it or below it. So we need to wait for COMEX open for that to actually happen and then to go, right, well, if we're sitting below value, there's two things, again, like silver, two hypos that can happen. It either accepts value pretty strongly, or we move away from it and carry on lower. So that's one of the only times when it's like an either or. Having said that, value acceptance, even though in the original Dalton books he calls it the 80% value, it is nothing like 80% probability, okay? According to what I've seen, and depending on the product and the trend at the time, you're looking at maybe 65% at best if the value acceptance aligns with the larger trend. If it doesn't, and if it's in a range and there's no obvious trend, you're looking at like 40%. And also then there's the time of day, so the earlier that the value acceptance happens, the bigger the chances that it's going to rotate. The later it gets in the day, especially on commodities, the less chances of a full rotation. So, there are like sort of weighted conditions that will affect the probability of the value acceptance trade. Why do I never trade funded? I do trade funded, but this is not the time of day that when I trade funded. So I try to do stuff like, first of all, my personal account, I only trade end of day. Whatever I'm going to do, whether it's going to be an options trade or whether it's going to be an intraday trade, I only trade end of day. I'm more of an end of day trader than anything. I might trade DAX during this time of the day because technically that is the end of day for DAX because we're coming towards, the later part of the London session. But we don't have DAX on these products. So therefore, I like to stay away from spending my money at the times of day when I know that the probability of the setups are 50-50, and especially on these products, right? So probability of either of those products doing something, whether it's a continuation or a mean reversion, literally is like 50-50 at best. Now, the mean reversion on metals typically has bigger maximum favorable excursion, MFE. What does that mean? Just a bigger move, right? So even though it's a 50-50 chance, if I see a potential for mean reversion, I will take that, even on the funded. But, and I don't know, to me, prop trading at this point is not really a priority, and it's like peanuts. So it's a means to an end. It's a means to practice some skills. It's just, I don't know, starting with like 2 and 4 grand for me after all this time. It's like, it's nice if it's there, but it won't impact my life in any sort of meaningful way at this point. Do with that what you will, but I'm 45 and I've been doing this for 20 years. So naturally, my sights and how my goals have evolved, they simply evolved past just having prop firm accounts. So, we have a corporate account, we have a software company that leases mechanical algorithms to institutions. And, prop to me is just a cherry on top kind of thing. However, at the same time, I still follow my rules, so I still won't trade probabilities that are very low if I need to put some real risk on. Luckily in combines, you don't put real risk, so you're just taking a punt, seeing whether it works or not. So yeah. So it's not that I never trade funded, it's just that I'm being super picky. And I went with chat for a long time, traded funded at the times of day when I know that I shouldn't be trading funded. And as a result, people were happy to see me click buttons, but I wasn't happy that a lot of the times those trades did not work. So therefore now, I don't trade for chat, I trade for myself. And I'm, like I said, more of an end-of-day trader anyway. And that's always been the case. So, again, this is the metal markets now. My segment started out as DAX trading that was supposed to do my DAX setups, and maybe we get that at some point. And even on DAX, I prefer to trade towards the later part of the session as well. So, it is what it is. Genius K says you're also helping us. Thank you. Well, we're just talking levels. We're getting ready for the day. We're trying not to do a million trades, for 1 hour into Globex Open, which is never a good thing. And it's, there's a whole host of reasons why we can hang here and talk what Asia did, where the dealers are positioned. It's not all about clicking buttons and trading accounts that matter to you, especially during the times of day when there are no good probabilities, right? It's not very clever to do that. But, every time I'm on group coaching and stuff, you can see that the end-of-day trades usually work out pretty well. And another reason why I've decided to spend a little bit more time in combines recently is because I'm changing my execution style for prop firms. I'm still not changing it for the way I do it in my personal accounts, because that works well. And also a big part of that is options trading. However, I noticed that the more the prop firms go towards this tightening belt sort of moment where they won't really allow full porting, they won't really allow, big positions and stuff, and therefore they are tightening the rules across the board. We've seen everybody do that. I've realized that my approach of trading sort of 3 minis and then entering one immediately on the trigger condition, then entering the second one, that's just not really a good risk of ruin, because the risk of ruin gets too high on prop. So unless you have at the very least 250 grand's worth of real capital, not prop, with 4.5 grand or 2 grand startup drawdown, but the actual room in your account, it's too much risk. It's just too much risk for me, and I needed to find a better way to do it. So I'm training my brain to unglue itself from the minis and to focus mostly on micros, and to use micros, because I've been doing minis since 2013. Micros were not really a thing back then. Nobody even talked about them, and I never really considered them as a serious tool. The only time I traded minis is like, oh yeah, I'm going to draw down, let me try and get back to whatever. And then I would be like, yes, I'm retrading myself. And then as soon as I would be out of that, I would be back to minis. Was that the right call? I don't know. Probably not. It still works, but it was just like the variance was too much on prop. Like you get these like jumps, you get like, 3.2k on one day, but then you're down minus 1.5 next 2 days. Then you're up like 4.5 grand. Then you're down again. And it's like, you look at your curve and it's like, ding, 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 ding. It's like a zigzag. It's supposed to be smoother than that. So I didn't really like that. And I've always had a problem entering positions when they go into profit, because I perceived it as a huge risk. If you have like 3 minis to work with, and you start with one, then you add the second one, then you add the third one, and if it's all in profit, you're going to mess up the average entry. It's no longer the same trade. So I thought to myself, how can I make this happen, but without messing up the average? And I had to swallow some of my ego to move away from minis. Very difficult at this point. So I'm trying a new approach in prop. I'm trying to train myself to do 4 micros or 5 micros as the starting position, and then adding up to 8 or 9 depending on the product. Right now I can only do 7 on MHG, so on the micro copper, which is kind of messing with the risk model that I had designed as well, so I'm not particularly happy about that. But at the same time, it's given me a new perspective of how that can be a good thing. So it's a bit of an experiment in prop. But yeah, like I said, I'm still sticking to minis in my own accounts. It's certainly been interesting, though, to see how my brain defaults back to not scaling in. Because I caught myself, I think it was like last Tuesday or something. I'm like, I'm just going to scale in once. like, yeah, that's not the experiment, though, is it? So you're supposed to scale in 3 or 4 times and get used to it. So, changing, long-standing habits is a really difficult thing to do. And it's just, it's annoying. It takes time. But, if you don't adapt, if you don't change, what are you doing, right? So yeah, I'm just taking this beginning part of the year to see whether there's a better way to minimize the downside while maximizing the upside. And ultimately, because I do inherently end up in live accounts very quickly, I need to make sure that I survive the 30% drawdown that they're going to put you through. And I don't want to go into shoulder tap, right? Shoulder tap XFA. So that requires a little bit more thinking rather than just, hey, let's full port XFAs, then get into a live and then lose everything. Because I want to be there unlocking the rest of the capital if I can. But again, it's a little extra thing, cherry on top. And that requires a little bit of a switch in mindset, I think, especially, coming down to micros is something that I never thought I was going to say. And to actually look at them as a really serious tool. But yeah, we're trying to adapt to that. So yeah. Where do I coach options? I don't coach options. Options are something that I do, but I will never say that I'm like the best or whatever. They work for what I do, but they're very context dependent. And like for example, my crude oil options were based on the fact that crude oil was in a big range for many years. So now that's no longer the case. Is there going to be a new range? Maybe. But at the moment, there's no range. We have a breakout. Now this is a weekly chart, so I'm just going to show you why I did what I did for a long time. So the weekly chart had its own range, right? But if you look at the daily chart as well, you also have these extended periods where the daily would also have another smaller range. So what I was doing is just tagging the bottoms and the tops of the range, doing long calls at the bottom and short calls at the top. Why? Because this product generally has a short bias. I need to switch off the news here again because it's cluttering up things. Is it going to be a new range? I don't know. Maybe the new range is going to be the top at 120 and the bottom at 75. But at the moment, there's nothing for me to do there. So I don't teach people options. I teach people how to read order flow and profile, average ranges, times of day when they're the most successful. Because I feel that's the most difficult part. Options are complex, but they're not the most difficult, right? So I don't feel like I could say too much on the strategies that I'm doing because I'm not using an elaborate, multi-leg spreads and whatever. Sometimes I do calendar spreads, sometimes, but I don't like them. I like the outright option where I'm using my expertise in order flow, supply and demand, and the ability to read the dealer positioning. I just use that. So it's basically the same thing that I do here, only I execute an options trade maybe every few months, and then I wait. If it's a short option, if I'm writing an option, then I keep it for as long as I can keep it. But if it's a long call, I just basically get what I can. And then the implied volatility has to be pretty high at that point. Because otherwise you're not going to have the movement, right? But you need to get the move as quickly as possible. Otherwise time decay is going to get you. But I don't teach any of that because in my eyes it's pretty simplistic. It's like a swing trading strategy, but through an options vehicle. And I really don't think I have much to say on that. I think that's it. That's my whole thing. So, yeah. How many years did it take me to get profitable? So I was lucky to have a friend who immediately put me, because I was a musician before. I was a high-level session musician. And I had a friend because I lived in an area of London where a lot of bankers and traders lived. And I had a residency at one of the bars there. So eventually I got to meet a lot of people from the finance industry, and some of them became friends, right? One of them became my husband. It's another story. But it was a case of me talking to someone who was already a trader, and he said to me, have you thought about going into trading? And I'm like, what are you talking about? I suck at math. I'm terrible. And he said, it's not really just like pure numbers, there's a lot of pattern recognition, and I think as a musician and somebody who has high IQ, you'd be pretty good at that. And I was like, nah, I don't know. So he showed me candlestick patterns, the candlestick charts, and to me they kind of look like music notes. I know it sounds silly, but I thought to myself, I need to know everything about this, like yesterday. So he told me what position to use, to always have a stop loss, to always have an intended target, and then he started showing me institutional supply and demand areas. I became a swing trader because of him, and for 5-6 years, I only did literally 4-hour time frame, scoring where the good quality areas were, then plopping in a position that was never more than 1% of the overall account balance, and then aiming for the other side of the swing. So on crude oil, if we were to take that as a strategy, you would be getting in, let's say, because this was a supply, you would be getting in, so you wouldn't have an entry yet, but you will be getting in when the market reaches somewhere around 103, 104, and then just waiting until it falls all the way down to at least, like, let's say 85, and that will be the trade. So as long as it's falling, and as long as it's moving away from the previous supply, you would stay in. How long that would take? Sometimes it would take up to a couple of months. And that's how I ended up with my first 6-figure account many, many moons ago. So I think I only took about 9 months of demo trading to really get the grips with strategy. And then I started super small. I started only with £2,000. But in the first 2 years, I made 70k. Then I lost that because I was a ickhead. Because I got super confident and I was like, oh, I can do no wrong now. But then I regrouped, remade the cash again from scratch. And in the next 3 years, I had over 250,000 pounds, which at that time was just under $500,000. And that's when I thought, hey, I like this. I want to do this forever. So, I didn't take long to make money. Was I consistently profitable? Now that's a different matter. The consistency part of it took forever, right? Because I was still making mistakes. You would enter a trade and you would be like, oh, I didn't read that correctly. Let me exit and then let me try again. And then you would realize that there's something you didn't account for, like maybe there's a release that you didn't know was coming. So that took time for me to kind of understand when the releases are happening, to also understand that trading really early in the morning was not my thing, especially not for swings that need to survive the intraday whipsaws. So I found it very easy to just get in towards the end of the day and then to let Asia move the market in the opposite direction, giving me space to survive whatever comes the next day. I kind of carried that over into intraday as well, because I realized that the highest probability trades are the ones that happen into settlement of some kind, and they are my bread and butter to this day. NYMEX and COMEX settlements is something that I've been trading for as long as I've been trading, right? But back in the day, I would carry that over with a pretty sizable stop into Asia and into London, and then again banking on that intra-session behavior to bring you the movement that you require, whilst also not going into too much drawdown. Again, do with that what you will. But yeah, there's a good time of day to trade, and there's a not so good time to trade. And if we look at what's going on with, let's have a look at gold. Didn't do the levels on Topstep on gold, but I did do them in just the grabbing deal levels and stuff. 5,000, obviously we said that last week. At one point it was actually 5,100, We spent some time chopping around there. So that's that gamma pinning. You usually get ranges around these big areas that seem to have calls and puts around them. They tend to kind of cause the pinning action to happen. But now we're trying to fight above 5,000. This is high enough to go either way at this point. But we do have some indication that we have started to maybe accept below the previous range, previous support, however you want to call it. If that continues today and we continue to go down, we have room to fall until $4,950 first and foremost, then 4,900, and then really the strong level further down is 4,800. So this has not changed. I probably did this a while back. To the upside, 5050 has cropped up, then it wasn't there previously. Could cause a little bit of trouble, but both 5050 and 5100, they're now no longer strong. They're actually weak calls. So if it starts to move back up, it's not too much to stop it from moving straight through those levels and going back up to 5200. And even 5200 doesn't look like it's super strong anymore. Oh no, 5200 is still a moderate call wall. So yeah, a bit of a decision making moment for gold. Eloisa says, good morning, back on schedule here. Well, yeah. Genius K says, my friend told me to do all that and I didn't listen. I had zero discipline. Again, I don't think it's discipline. I always say it's information asymmetry. It's not a discipline. So let me ask you a question. If you do something every day, let's say when you're driving, do you stop at a red light every single time? Every single time, without a fail. You see a red light, you stop. Is that something you do? Or do you just kind of decide, well, today I'm not going to stop at a red light, I'm just going to run through it. And when you do stop, do you require like a mindset coach to hold your hand and to go, you can stop. It's a red light, you can do it. So probably not, right? So why is that different than not doing something in trading? It's because driving has a process, right? It has a process. It's a clear process. You drive, you come across a red light, you stop. There is no question, should I do it? Should I not do it? No question. So unless you're like heavily inebriated or something else, you will stop at a red light without any trouble. How much discipline does that require? None. So why do you then say that, oh, but you don't listen, you can't do this, you can't? It's because the process is not there in trading yet. So whatever you're doing, your process is just not there yet. And your brain has no other option but to go into survival mode, thinks that it made a mistake as soon as you lose, and then it starts doing stupid things. Why? Because it's trying to fight. Because your brain perceives the markets as a battleground, and it shouldn't be. There are no mistakes, there are probabilities. And until you train that out of yourself and create that into a new process, your brain will keep defaulting to doing stupid things because of that error-related negativity. So once you stop looking at the losses as, oh, I made a mistake, oh, that's shameful, oh, this... It's never going to change. But once you do set the right process and you give your brain a contingency plan and you go, well, if we go long from 5,000, for example, on this particular product, see, most people will be doing just one biased side of the story. It's like, well, it has to go up from 5,000. Okay, so what if it doesn't? Well, I might try and catch it. Might try and catch it is not a plan. Might do this, might do that. That's a wishy-washy outlook of doing something based on a line on the chart. So try doing me a favor. Write hypotheses at each of these levels. What do you want to see? First of all, do you want to be a buyer or do you want to be a seller? And don't use the same level for either or. Where would you want to buy this? Where would you accept to sell this? What would be a gamma squeeze? For me, that would be if we go over 5,200 and carry on screaming higher. And how are you going to approach that? What will be the thing you want to see at the time? Whether it's order flow, so do you want to see absorption? Do you want to see consecutive bars coming in with a decent amount of volume? Do you want to see some sort of a range established and then take that? Maybe you trade at, the times of day when the ranges are very, very high probability. And then you define all of that. So in the end, you're not going to be super surprised that it's like, oh my God, it went up or it went down. Because you will have a contingency plan everywhere. And then also if you want to buy it somewhere when it starts falling, where would it be enough of a fall for you to say, okay, I think this is now overshot. So let's try and get some more longs in the picture. And what's the time as well? To me, time of day for intraday as well, that was a complete game changer for me because I no longer had to guess which direction. I would just be like, well, where did we go up until now? And then you get to settlement. The likelihood is on most days, not every day obviously, but like let's say 70% of the time is going to do something to the opposite side. How big of a move is going to be and how long it's going to last, that's a matter of context. But you know the direction already at that time of the day. Now, I also use the opposite thing, like for example on crude oil, if we have something that resembles a failed auction very late, like let's say we get to settlement and it looks like it's failing the auction. I think we had that maybe on Thursday. It's no longer a high probability that it's going to fail the auction. So I actually take the opposite side. I will take a continuation trade instead, but only after like a decent fallback, which on crude oil can be super, super quick. So things like something that doesn't happen is equally important that does happen, but you do need to know the probabilities. And whilst I'm not one in favor of like backtesting things and thinking that you're going to replicate those results exactly, definitely not in favor of that, but I am in favor of backtesting as a functionality and mechanistic action of the level and how it can look, and to just kind of give you an idea of what the setup should look like and how many times it roughly occurs when you're looking at the previous 100 days. So that I'm in favor of. But people thinking that, I'm going to use like a 25 tick stop and then I'm going to get like 75, and then suddenly you get the market state changes, everything goes insane, and your 25 tick stop that worked 3 years ago or 2 years ago in crude oil perfectly, and it was actually a very generous stop loss size, it doesn't even survive a nanosecond because of the volatility that we're seeing. So you have to have something that is scalable and that's adaptable, but let's face it, the setup is still going to be the same. On copper, for example, you can still have things like the wick below the Asia low and a reversal. But at times of high volatility, the wick below is actually going to be like a million ticks below it and then coming back. Is it playable? Probably not. So how does that serve anything? So any backtesting that you do, you just need to use the level and to test the functionality. Does the event occur? Do we swipe below an Asia low and then carry on higher? How much higher through the Asia range? Now that's also something that changes, right? So the Asia range is going to be big, small, medium size. How much? on average to be reversed through the range? Is it all of it? Is it 50%? Is it 30%? That is scalable. But you saying that, oh yeah, once it wicks the Asia low, I'm going to capture 30 ticks into the Asia range. So what happens when the Asia range is very small? Are you still catching 30 ticks? Because the likelihood is that the Asia range being small, you're probably changing sentiment on the larger time frame. And they're about to start running it to the opposite side. That's what usually happens when Asia ranges are really tight, on metals in particular, right? So how do you approach that? You know? So you can't be super rigid, but you definitely can test the functionality of the setup in different modes, effectively. Earl Wallace says, I've been getting locked out, so it's forcing me to trade that late open. Okay, that's fine. I've been trading Asia. Nothing wrong with that. Asia, I love trading Asia. You see me doing trades for Asia all the time. I sleep through them as well. I had to sleep last night, but normally I would, keep an eye, because I don't sleep all at once. I kind of sleep for a few hours, then I wake up. But yeah. Market is full of patterns, but it's also evolving. So market is full of volatility differences, but the patterns stay the same. That's the big secret. Failed auctions will still look like failed auctions. Neutral type responsive days always looks like neutral day responsive types. Reversal at value low is always going to be reversal at value low, regardless of the volatility. But the volatility changes, which is why people say, oh yeah, it's never the same. I disagree after watching the markets for 20 years. It is the same, it's just the range that it does so is vastly different. Sometimes the ranges are tiny, sometimes the ranges are medium, which is my sweet spot, and sometimes they're bonkers and you just can't find a way to enter a trade that you can see happening, but it would require like a 500 tick stop, and you're like, I'm not doing that. So it's a choice. It's not that it doesn't happen, it's just not playable in any, especially not in prop. Like maybe if you have a larger account and then you can go to micros, then that kind of starts to make more sense. But that is our pattern. See, Bosco liked my my analogy for the mindset coach for stopping on a red light. Yeah, so it's not discipline, it's information asymmetry. Earl Wallace says, I'm on my 6th payout, starting over after failing times 5 copy evals. Oh, God, why are you copying, man? Started using 500 profit target to lock him out, presumably, for the first time. I'm tired of giving back my profits. That's a good thing, yeah, but it's a tricky one. I'm not really in favor of copy trading, guys, especially not if you're not like consistently getting payouts. And consistently means at least once a month, at least, like clockwork, without losing accounts. So you can maintain an account for like 3 months, 6 months, a year, and you can get enough consistency to derive profits month after month after month. If you're blowing up, then getting a profit, and then blowing up, and then getting profits, it's a tricky situation. You won't survive the live account. Like, you just won't. I'm telling you that with the deepest honesty. It's difficult maintaining a single account with practices that people have now been told that are okay. Blow up a whole bunch of evals because they're cheap, right? They're cheap. And then get a few that hit and that makes up for it tenfold. That doesn't work in live. Like, you have only one. So if you can't survive one, you're training yourself for something that is very likely going to go away. I'm just going to say it, right? So I don't see the sim profits payout and stuff being okay with the regulators. I really don't, okay? And if, the regulators are very, very slow to implement anything. Most of them are of age, and they don't take well to change. They are aware now what's happening in the online prop, okay? And unfortunately, that means they will probably want to push everybody towards the old model, which means you do an eval, no payouts from the sim, and only payouts come from the live. I can totally see that happening in the next sort of 2-3 years, right? So if you don't train yourself to keep hold of one account and to first get rid of the information asymmetry that you perceive as lack of discipline and patience and whatever, and if you don't have a process for contingency plans and for making sure that your brain knows what to do even if you lose a trade, rather than seeing it as a mistake and then flipping out into losing the plot and tilting and losing everything, it's going to be even more of a difficult game than it is now. Now, you know that, I've been live twice. There's only 0.1% of us that even make it there. It's a very difficult game. And whatever risk the prop gives you, it's always much tighter than what you have in your live. Much, much tighter. It's a completely different game, right? So now we have a whole bunch of sim farmers that have trained people to think that blowing up evals is a business expense. That's where we're at. And a lot of you are thinking the same way. It's like, oh, so what? I only paid like $200 or $49 for it. I don't care. You should care. Frankly, you should care. Because things are changing, rapidly changing. I'm seeing all of the prop firms that are pushing people into live. Topstep gets a lot of stick for that because we used to push people into the entirety of the XFA. Now you have to, guess what, make money to unlock more. I know, it's a concept, right? Actually making money before you blow out. So, if you continue to train yourself to not matter that you've blown up 5 copy-traded accounts because you got a payout, you have very slim chances of surviving in the future live account. Very slim. Especially now when they will push you into a sim XFA, shoulder tap XFA after a drawdown of 30%. Only 30%. And I've known people who have drawn down their live account 50% on the first day of trading live. We also frequently get questions, apart from very few individuals who keep banking, those large live leaders, as they call them, you look at their accounts and they have been on a massive run of daily loss limits bonanza, as I like to call it, before hitting it big. So those of you who are like, hey, why can't we have the top 5? Like Korab, for example, I would love to see him live. That would be amazing. Most of the other people, they kind of pop in there with like full porting something or getting lucky. They are on that list because they've been on a massive losing streak, and then suddenly they get lucky. So that's why they're not on Topstep TV. There's no consistency there. So even though it gets impressive that they make like 40, 50K, that is generally not consistency, unfortunately. So for those of you who are like, let's get the top 5 to talk about it, and it's always changing, apart from, like I said, 1 or 2 names, let's get them to talk about it. But the others, I would not want to see somebody coming on to tell me how they full ported 15 contracts on a day when NASDAQ went a million ticks up or down. But what did you do yesterday? Oh, I had a data loss limit. What about the previous week? I spent every day in a data loss limit. Is that useful? Knowing that they're doing the same shit that you are, except they got lucky on one day. It's like, come on. Yeah, even Corab. Like everybody, listen, everybody's going to have a few bad days. But Corab, from what I've seen on Twitter, because I do see him pop up on Twitter. I don't get involved much in Twitter, but I lurk. So he does use the DLL, from what I can see, as a stopping point. Again, not a great thing, but he's got consistency. Like he's able to come back. And he's able to make sure that he doesn't have as many red days. So, having a few DLLs, that's fine. But we've had some people who have had 42 days of data loss limits, and then they hit a big of like 100 grand on one day. And then right after that went on to have another sort of 17 days of data loss limits. So what do you call that? It's just luck, right? One day. And I'm never going to be that person. Like, unless, I start trading our corporate account, which does have those kinds of abilities. But it's a corporate account. I'm not allowed because I'm not the only one there. And it's a mechanical trading account. Like, I switch things on and off. I don't click buttons to enter trades, right? But I will do an analysis of the environment. What should be switched on, what should be switched off, right? However, with intraday trading, you will never see me have one day of like 50 grand. But you will see me have 400, 800, 2 grand, 800, 1.2. Maybe a loss limit of minus 1.5. Then again, 800,000, 1.2. That's just the kind of trader I am. Even though I have larger risk reward days on some days, and yes, I have made 4.5, 5 grand in one day. 7 grand was probably one of my biggest days ever in Topstep. But it's, it's always a matter of context. Like, most days will not allow you to make so much money on a single trade. And I'm a low frequency trader. I don't go with, I don't go for, I need to be at number one. I don't care. Like, as long as I'm making money, I couldn't give a monkey's what that other person that I've never met in my life is doing. I really couldn't. And I don't know whether that's just an age thing or whether, comments like, oh, Dee, why don't you trade your funded? It's the morning. It's Monday. Like, leave me alone, It's not the time. If you have a problem with that, this is probably not the stream for you. If you want to see people clicking buttons all the time. Because I click buttons 3 to 5 times a day. And in recent times, even though on some of the reports you see like 12, 15, is because of the scale-ins. So I start with 4, add 5, 6, 7, right? So that's already 4 trades per one trade. And then you get to the second setup, maybe it's a crude oil setup or something, the day arrives, the time of day arrives, and I start to look at the next setup. And I will be saying things like, okay, well, now I start with 3, maybe we add to 5. Or natural gas, I start with 5, I add up to 9. So that means, 3 trades, but how many executions did you have? 1 for copper, let's say, 2, 3, 4. So adding in another 3 times, that's 4 trades already. That's how the platform counts it. Then the second one would be entering with 5 and then adding 4, 1, 2, 3, 4. So that's again 4, 5, 6, 7, 8. By the time I'm on my third setup, because of what I'm doing now, that literally spells 12, 15 trades. But it's actually 3 trades because of the scale-ins. Does that make sense? So yeah. How do I join these trading competitions? Guess what? It's not a competition. It's just tracking P&Ls. So there's no competition, mate. The competition is you pass the eval, you last long enough in the XFA to make it to the live account, call up, and then you just trade and you see where you are in the rankings on a prop firm. So it's not a competition. It's literally just trading, doing well, and Topstep highlighting you if you've done exceptionally well. But if you think you're going to gamble your way to that, think again. But good luck. Good luck. If you think you can do it, you're consistent, and you can maintain consistency for 6 months, 9 months, 12 months, yeah, very welcome to do it. For sure. What sort of things do I like to hold as long-term portfolios? Honestly, it's literally either physical metals or very few stocks that I recognized. Like I still have Palantir from I bought Palantir when it was like $9.40, and I'm never getting rid of that. Maybe when I get to my, pension, when I'm, another 20 years, maybe I'll close it. I have some gold and silver bars. I am thinking of maybe getting involved with some kind of battery creation things, like, electric vehicles and all that. That is the future, even though I think they haven't quite taken the center front stage yet. But yeah, so it's usually something that can be a disruption for, one of my out there investments is also Virgin Galactic. That's just me being a sci-fi freak and just believing that someday we will go into, and I have some weird stocks like lunar exploration and stuff that I believe will someday explode. But again, I'm just a sci-fi nerd who's holding this like utopian dream that we'll all unite in our exploration of space. So yeah, I do have some weird weird ideas, and I've put some money towards them. But most of the time, it is basically something that can be disruptive to the market. I did put some cash into QuantumScape. I'm still not sure about them, so we'll see. But yeah, not like a million things in my portfolio. It's like a bit of metals, a bit of, bit of long-term stocks. And yeah, it's just pretty sensible. Right, gold sniper, yo. I've traded gold for 10 years. Yeah, I've traded it since 2013. Right, Gold Sniper says, I just clicked your channel on my way to YouTube. You seem to be a good trader, all the best. Yeah, well, after doing this for 20 years, yeah. Alright, troops, I got into Lunar at around 4, yay. Yes. That's what I'm talking about, lunar exploration. So that's one of the companies that's working on like the machines that they send out, like the rover and stuff. So they're another one of those. So yeah. Start a movie about a sci-fi prop firm. You know what? I'd watch that. Maybe once we colonize Mars, Elon style, maybe we can like try doing like trading from Mars. Topstep on Mars or moon, on the moon. Maybe the moon would be more relevant. Should we pitch that as an idea to MP? MP, I know we should make it a show about Topstep traders on the moon. We should like when that lander tipped over, it hurt. I know, right? Yeah, we feel it more than others. It's like, no, what are you doing? Like, what are you doing? All right, so I don't think I've got a good setup here anywhere. I keep, like, as I'm talking, I keep, like, scanning things, but I would like to see crude oil at 95. Gold, I'm just using as a benchmark because again, it's way too big for. It's a bit spiky for me. Gold. I don't know why it's gotten so jumpy, but whenever I look at it, it's giving me Nasdaq vibes, and I don't like that. So I'm gonna still probably stick to copper, maybe some silver towards the end of the day, and crude oil. Definitely interesting to me today since they rejected the 100 level again. So that could be an indication that maybe we get another situation where we open higher, then we just roll over on Monday, and then for the rest of the week we try and creep back up. That could be a pattern. But yeah, they're certainly not happy with crude oil over 100. Every time that's happened, somebody steps in and hedges. Not real hedges, obviously. Hedging in the market. It's funny. I have an acquaintance. We saw him actually on Saturday when we went to see our best man, and he used to work for a hedge fund. And he's a funny guy because he never remembers things. I don't know whether he drinks or something, but yeah, him and I used to have loads of conversations for the last 10 years. I see him on these dues that my best man does every single time, right? And last night he's walking in, not last night, Saturday, he's walking in and he's like, "Hi, I'm Richard." And I was like, "I know Richard. We've known each other for 10 years. And he's like, "Oh my God, I'm so sorry." Am I that not personable? Or do I change my hair and face so much that... He couldn't, but yeah, he did kind of recognize me. I just found it very funny. And then I said to him, "Oh, how's work?" And it turns out he doesn't work at a hedge fund anymore. He's now doing gardening. So he's still in hedging, only a different guy. He still does hedges. So yeah, it's something to consider. Still does hedging, only different. Do I tend to stick with my long or short-term bias for that and look for entries? Or do I shift? Yeah, no, absolutely not. I will literally change my entire mind halfway through the session if the time of day calls for it. So, let's say that we go above Asia high on copper, right? So I did have an idea that we're going to go short at value low. But if we open into value... and then we never really get back to Asia high, I'm immediately flipping back to longs. And the same thing, if I miss out on longs, that's fine. But we get to 590 or 6 evens, depending on the context of the day, I will then flip short. I absolutely do not hold on to any biases throughout the day. I just trade what's in front of me. And if we end up creating some single prints on any particular side, I will then use those single prints as a new orientation. So that's what we mean when we say MGI, market generated information. But right now I've got nothing. It's I'm looking, maybe revisit of 80 on silver could be an interesting one, but we're not there yet. And we've got 20 minutes until it even gets finished. And I use a 30-minute time frame to make my ultimate decisions, but I will use bookmap and order flow to get in. Back in the day, I used to use 1 and 2 minute time frames, but since about 7 years ago, I kind of shifted away from that, and I just look at the 30-minute time frame, look at the order flow, and I don't need a super defined entry anymore myself. That's probably not true for most people, but before I wouldn't even make an effort to get in until a 2-minute time frame showed me a very, very strong engulfing one side or the other, and that meant that it had to take out at least 3 or 4 trending candles in the opposite direction, and that would be my entry. But these days I really don't need that, so what I do instead, I will look for absorption, or I will look for a sweep on bookmap, and then I want to see the other party stepping in. So the other big bubbles stepping in, and that's my entry. And then I just look for follow through after that, because we've already had 3 consecutive bigger bubbles in a particular direction post the sweep typically. And I look at cumulative delta to see whether it's moving off the dead point, whether it's reversing, whether it's shaving off a lot, how quickly is it coming back to the previous level as well. That could be a good indication of super strong longs, for example. If you see a sweep to the long side and then it looks like it's reversing, but then cumulative delta starts to creep up very quickly, that's still a long. They're just having a breather. So some things have evolved for me over the years. Should everybody do that? No. Order flow is not be all and end all, but I quite like it because I feel like it allows me to peek into like behind the scenes stuff that very frequently precedes some of the ideas that we might already see developing, or sometimes invalidating the idea. You know, if I'm looking for shorts, but the metal's got to go into another mad trending move up, I will see that on Bookmap, and then I won't try to short anything. I will actually go with the idea that it is a gamma squeeze of some sort. You know, if we go over a gamma wall, let me see where the gamma wall is in copper today. Right, so yeah, it's 6 evens. So again, they keep flipping between like 590, 6 evens, 590, 6 evens. So that's not really changing much. But yeah, let's say we get a day this week where we're still looking at the gamma wall at 6 evens, then it kind of starts to overshoot. That would be my cue to not try and be the mean reversion D, but just to go with the flow and, as we say, caveman it. But it's not complete caveman because it's based on the fact that you are seeing the squeeze happening. So you're just, you know, using that as a potential bounce. You know, if we bleed through 6, then we get 605 and it's not stopping, then I will use 605 as my further bounce point. So it's not exactly a caveman trade. I absolutely hate doing breakouts just like willy-nilly because they never really work for me because I want to hold my trades longer, right? So I have to be pretty selective with the types of locations that I take, and they tend to be always similar. So they tend to be outer edges of the value areas. They tend to be average daily ranges high, average daily range low, or average session range, average session range high or low for the given session, whether it's London, whether it's Asia, whether it's COMEX, NYMEX. That's Bernard. Bernard is whining for some weird reason. What 4 indicators do I have on my MSG chart? So there we go. We have the visible range volume profile, VWAP, which is open, high, low, close divided by 4. I have the volume simple moving average. So that's the moving average for the volume. And I don't know why I have the link here. So that's... They keep putting the link back on, and I don't want to have the link indicator. I don't want it linked to anything. I wanted the dome and the chart to be completely unlinked. The link freaks me out. I never gelled with it, and I will not gel with it again. So yeah, really 3 indicators plus a correlation, quotient, and the ATR, which are not in here, but they're basically these 2. So yeah, I suppose I've got 5 things on there. But yeah, mostly just order flow, data, nothing too much. I do have a whole other charting platform with my own levels and my own indicators as well, which helps me sift out what's going on. And then a lot of the times I use that to figure out the levels without needing to do much work. So yeah, you can see those on my Thursday live streams on my own channel, if you're interested. Raphael says, the link annoys me so much. I know, for me as well. I don't know why I don't gel with it. I just can't. I can't. Like, the fact that it freaks me out when I want to change my dome and then it changes my chart as well. I'm like, no, what are you doing? Stop that. And then I'm like, I have to unlink it, and then I have to redo stuff, and like, oh, yeah. I'm just very old school when it comes to that. Joe says, is hedging and shorting the same? No, not at all. You can long hedge as well. So shorting stocks is different than the futures, because in order to short stocks, you have to first own them, and if you don't own them, then you have to borrow them for somebody who has them, a market participant who does own. So it's a very complex thing. But in futures, you have none of that. They're derivatives, effectively. And even though some of them are physically settled, like the commodities, you can be long and short, and nobody cares. It's not a complex situation. So yeah. But yeah, no, it's shorting and hedging is definitely not the same. Because let's say that the market makers could be short calls, but then when the market goes over that short call, the position is losing money. So how do they hedge? With longs in futures outright. So what's that? The longs are then a hedge. Does that make sense? Troop says minus 525 delta right now in Globex Open. On ES, no downside movement. Should have taken the long there. Yeah, I mean, I don't like trading equities this early. If I trade anything, it'll be DAX, because now we're coming into the final sort of morning session on DAX. It's lunchtime over there. And yeah. My top data says single stock futures will be interesting once that. I'm not sure, I'm not sure that. But first of all, there's so many of them. And don't forget, the CME has had an idea to do something similar back in the day, and it didn't happen. So, with futures, you have to wonder how much volume those single stocks are even going to be trading for. Because if there's no volume, and is it what's the market cap of the stock? Like how the single stock futures? Crichton, can you stop screaming? Crichton always barks at his dad, who's trying to get out, and because he's deaf, the dad doesn't even know what's happening, but Crichton is barking at him from the other side of the door. So it's a weird dynamic. Those are my dogs, by the way. Yeah. All right, so we've got another few minutes to hang here. I will be on group coaching later on, so maybe we can do some trades back then. But just so you know, the way I like to structure my day, I will do some Asia trading, usually some sort of a shakeout and longs or shorts against the shakeout for the Shanghai, pre-Shanghai move, and then I basically trade that. Then I have a break until 6 a.m. my time in the morning. I am GMT over here. And then I would try usually another fade. Now today that didn't look right because the move wasn't big enough, so I stayed out of that. After that I will turn my attention to DAX, usually for this time of the day. And I don't really look at the metals until, let's say, about 90 minutes into COMEX. And same thing with energies. So the next time of day that I'm looking at would be closer to the Euro close time. So half an hour to Euro close. And then if I don't see anything, or I have like a 1 hour trade or something kicks off for that time of day, I will then wait either to take profits or to find another trade for NYMEX settlement. So it's a very structured time of day thing for me. Therefore, the only setups that I like to take during this time of day is if crude oil runs away to the upside, I like to short that. And you've seen me do that before. But now we've fallen down. It could reverse, but at the same time I have 95 as my next area of interest. There's nothing really here in this area. There's like a bit of Asia low, but Asia low is not generally that much of a thing. London low tends to be a bigger deal for crude oil and for like those sweeps, stop, run, and reverse type trades. And then we have 95 as a very interesting level. So it's further down, therefore I can't do anything here. We didn't run to the upside for me to short that. Gold is just in a bit of a range. Copper looks interesting for further upside move. it does, okay? So if we manage to stay above Asia high, I would want to see a test of Asia high, 77.50 roughly. And then a further move towards 590 and maybe even 6 evens if we've got enough juice. In absence of an up move, we could fall down to 550. That's been there forever. It remains to be a pain point and a pretty strong support. But yeah, so let's see. It's Monday. Let's not rush. Let's stick to our plans, stick to our processes. Make sure that you give your brain contingency plans so that it doesn't spin off and do stupid things, because that's the reason for it. And in the meantime, learn more about what moves the markets. Usually it's the dealers, right? That's what creates intraday ebb and flow. And yeah, let's just all continue to push things forward. You know, I have my own little bugs that I'm trying to sort out with the execution style. So I'm going to keep working on that. And I'm going to try to keep my ego in check and to keep telling myself that micros are okay. And that it's not terrible, that micros can be seen as a very serious vehicle. But yeah, so that's Monday. It does look like we're going to have another interesting week on our hands, for sure. What times on my chart? They're 30 minutes. Yeah. No, so I use order flow and bookmap for executions. I do not use low time frames for that purpose. So any tips for an opening range trader in the morning and mean reversion in the afternoon? So I can't really comment more on the opening range style trading. That tends to work better in equities. I'm a commodities trader. I don't think it works very well. I think it works with like 30% accuracy. Why? Because most commodities have the head fake. What's a head fake? It's basically the first half an hour or first 15-minute candle that goes the opposite way of what it will do eventually. Crude oil has it, gold has it, silver has it, copper has it, natural gas has it. Everybody in commodities knows about the head fake. So doing the opening range break and expecting for it to just run away, I just don't think is the right strategy. But mean reversions, copper for example loves doing the break of the initial balance and then reversing in and around the euro close. So if you're looking for mean reversions, that's something to look out for. Obviously nothing is 100%, so don't take this as like, oh, Dee told me to do this. No, read the disclaimer, the risk disclaimer. Disclaimer? I've just made up a word. Excellent. So it's always a probabilities game. Nothing works 100%. Nothing never works. Okay? So when I say I'm not in favor of opening range breaks on commodities, it's because I know, for me, they've only appeared about 30% of the time. I can't trade that. I need 50 to 70% event occurrence and success. How I will then get into that, that's another thing. But generally, breakouts of any kind are not my jam. I'm mainly a mean reversion trader or a pullback trader. So even if there's a gamma squeeze of some sort and some kind of a breakout, I will still look for a pullback to the nearest options level for continuation. I'm super uncomfortable going in on a breakout. And I think that stems from the fact that I know what happens when you're trading with size. You go in on a breakout, and because typically breakouts go into thinner areas, there's nobody there to take the entire order. So you get filled at a completely nonsensical levels. You can't tighten your stops because you don't know where you're going to get a fill. The fills are random, prone to slippage. So I just dislike breakout trading. Sorry, for me it doesn't work. Mean reversions, on the other hand, I like my ADRs, so average ranges, statistical averages, which we do have on our Blatek indicators, but we also have on our Discord server. It's just a utility server, it's not a community of any kind. It's just like, if you don't want to use the platform that I'm using, then you go and grab the level, and that's actually what I do a lot of the times when you see these ADRs printed. Alright, that's going to be it for me why does Topstep opening call take the opening range in gold and crude? You'll have to ask them that. Because, I think they're comfortable with something having a 30% success rate. Because when they do catch the days when they just gotta run and run and run, yes, they're big days. You look at like 200, 300, 400, 500, 600 ticks. But they only happen 30%. So me personally, I can't do that. There are traders out there that are completely comfortable with that. I'm not. I'm sorry. I can't trade like that. All right. I will see you a little bit later. This was the Metal Markets with myself, Marcus Talker D. Thank you so much for sharing your time with me here. Let's see what this week brings. It's going to be a crazy one again, probably, judging by what Crude Oil is saying. So be careful, head on a swivel, and all of that. And enjoy the daytime show and the opening call. And I will see you again a little bit later. Take care.